Hey guys, welcome back to the channel McNallie Money, the official home of power mining analysis. A big episode for you today with the latest miner news, earnings, and social media gossip. A lot to get through. Before we get into it, take a second, smash the like button, guys. Big help to myself and the channel. Anthony loves it. If you're not already subscribed, McNallie Money, feel free to join and let us know in the comment section below how you're feeling about the Bitcoin miners in light of today's pullback and your current top pick in the space. With that being said, let's get into today's video. All right, guys, away we go. Tuesday afternoon. We've been busy with interviews this week, Anthony. It's actually our first regular podcast, so looking forward to this one. We've got a number of company news articles to walk through. Before we get into it, though, Bitcoin itself not off to the greatest start this week. Yesterday, we saw most of the miners actually a healthy green day, really on the backs of that TeraWulf Google Fluidstack news. However, today, the reality of the sinking Bitcoin price, sinking hash price appears to be setting in. So Bitcoin itself down in the $113,000 range, maybe an opportunity to top up your Bitcoin accounts if you're still looking to get some more in your wallet, and the miners themselves following suit in a big way.
Absolutely. I've even seen the HODL 15 up-to-date table, and it was 50 Bitcoin to get on that table in the top 100 last week. I think it's over 70 now. So there's a lot more buying going on. The ETF, the IBIT ETF, which is the largest Bitcoin ETF, has been absolutely hammering Bitcoin for literally weeks and weeks and weeks now. And bear in mind, we've said before, only 450 Bitcoin is mined per day. These ETFs have been eating into thousands, per day. And so this pullback is nothing more but than a blip, to be honest with you. There's no news out there suggests it's going to go into any type of drop that we saw in maybe 2021 and 2022. This is probably a temporary movement now until we see it start to rise again.
Yeah, I know I'm taking advantage of these dips personally to top up my coffers as well on Bitcoin. Now, the Bitcoin miners, as we say, started the week off relatively strong yesterday, green across the board, specifically for the HPC proxies. However, today they've given back most of those gains.
Yeah, a red day, and with that Bitcoin drop, it was only natural to see the Bitcoin miners react in a similar way. In fairness, yesterday, which we didn't cover, we saw a lot more green on the board, even though the Bitcoin price had dropped from the weekend. So, but today, with that Bitcoin price dropping into the 113 range, you can see, red across the board. Hive's having a reasonably good day, only down just under 1%. So they're having a good day, and we'll talk about their latest update. And if you hadn't had a chance to yet, we had Aidan and Frank on the podcast yesterday, so that's been released, and that's well worth having a cup of tea and watching that podcast to hear exactly what's going on in terms of that phenomenal growth of hash rate in Paraguay. Also, how they're fully focused on delivering HPC and anticipate getting their revenues to increase from currently 20 million of annualized revenues all the way up to 100 million, towards the end of next year. So lots to discuss on the podcast there. As I say, well worth a listen.
Yeah, you're certainly right. A cup of tea with Hive, and then you can follow that up with our Sam Tabar interview, Bit Digital. Some great insight there, and another one that was very well received by the retail audience. Now, to kick things off in today's podcast, we wanted to talk about TeraWulf. They've been relatively quiet. They've paused their monthly production updates. They've obviously shifted their strategic focus to HPC AI. We broke the news or covered the story in terms of the Fluidstack deal backed by Google, with Google taking an 8% stake in TeraWulf. They've now decided to upsize that, with Google now holding 14% of TeraWulf. So this was obviously great news for the entire sector. The upsize was even better news. That supported yesterday's green rally we just discussed, but TeraWulf seems to be making up for the quiet period, and now really making some big moves with this hyperscaler contract.
Yeah, this is another good update for TeraWulf, and exactly what they promised to deliver. I didn't expect it to happen quite so soon after the first update. We're only just getting our heads around the first update, but this second one here, and the fact that Google now have, about 14% of TeraWulf means they're fully focused in delivering this contract along with Fluidstack over this next few years. Now, in terms of the incremental increase, 160 megawatts of IT load with operations expected to commence in the second half of 2026. Remember, they've already started receiving revenues from the Core 42, and then they've got this new latest contract, and this particular part of the contract will start to bring in more revenues towards the end of next year. But great to have that backing by a hyperscale like Google. I mean, when you look at the valuations of these companies, and you look at the likes of TeraWulf, I mean, a couple of days ago it was 2 billion, today it's 4 billion, and they're dealing with Google, which is in the trillions effectively. So it's an interesting conversation. Apparently, the deal around the table, this has taken 4 to 5 months with the likes of TeraWulf, Fluidstack, and Google around the table. They're going through all the intricacies of the contract, and so this is not done overnight. And when people are sort of anxious that other miners need to get out there and make their announcements, that just gives you an understanding. These things take time. You've got to go through the contracts. You've got to go through leases. There's so much involved in delivering these projects, and that if anyone thinks it can happen in a couple of weeks, they're sadly mistaken there. So we've seen some big ones announced already. I'm sure there's like a lot of other companies, even Tyler from Cypher Mining has said, expects by Christmas. That's probably a line for a time frame. They've probably already got, significantly way through a contract, and they're just probably finalising it. But it's going to take, maybe a few months before they make an announcement. But he suggests by the end of the year they will have an announcement. So these things take time, but it's great to see TeraWulf making these two announcements in just literally a matter of days.
Yeah, it certainly is. Now, speaking of upsizing the deal with Fluidstack and Google, they also upsized their convertible note offering. So that's now coming in at $850 million, obviously providing some of that financial flexibility to start the build out retrofit process for this contract.
Yeah, so it's been increased from originally it was 400 million, now up to 850 million. Actually, potential to having an additional 150 million. That will take it to $1 billion. Now, effectively after costs, that's pretty much probably close to 980 million. In terms of the conversion premium, 32.5%. And also, there's going to be a cap call transaction with an initial cap price of $18.76 per share of common stock. And that represents 100% premium on the closing price from yesterday. So we've seen a lot of miners just to cover the downside of these types of convertible notes by bringing in these cap calls there. And many that took out the convertible notes are doing exactly the same. So Terrell following suit there gives themselves a little bit of cushion as they move forward. But a strong offering, $1 billion. Remember, not too many years ago, TeraWulf's market capitalization was in the low $100 million range. So they've really come through and delivered exactly what Paul, Patrick, and the rest of the team have been suggesting as they've been on the podcast many times to discuss this.
Yeah, they certainly have. And I went back and looked at some of our first coverage on TeraWulf and IREN actually, and we were covering TeraWulf under $1, IREN at the $4 range. They were at 3.6 exahash when we started covering them.
I purchased TeraWulf at 52 cents a share when I started buying my first tranche of TeraWulf, and I bought the stock all the way up to $1. So I made some really, really good buys in them days, and managed to take some profits on the way up as well. So it was a appears to be too good a deal to be in them. And many of the miners, you get them opportunities. I remember going back towards the end of 2022 when that Bitcoin price went all the way down to $15,000 and IREN shares went to literally $1.02 in November. Now, I didn't buy them, but I bought just after the new year at about $2 a share. But if you'd have got in at $1 a share then, and the closing price yesterday at $21, which was, I think, it's the highest closing price they've had in the last 3.5 years since they've IPO'd, and that's a 2,000% increase in the share price. And only, I think, MicroStrategy in the space can actually have something of a similar position with their share price.
Yeah, it's interesting looking back. We talk about the Bitcoin mining sector. We see so many comments in the video description complaining about the returns. But as you say, Anthony, we've already witnessed some 5x, some 10x, some 20x's in the space from the cycle lows just a few years ago. So great to see those numbers continuing to improve. Now, another high profile interview we conducted just recently was Ben Gagnon from Bitfarms. He talked extensively about their HPC AI strategy, their focus on this PJM market, the opportunity they see both in Washington along with Pennsylvania and Quebec. Now, today, they've come out with another strong addition to the board of directors, a former AWS exec.
Yeah, so they've made another announcement to the board, and this will be the sixth independent director on the board now, with only Ben as the in-house CEO is also on the board of directors. So Mr. Dusu is now been appointed. He's got a distinguished career as a senior engineer with 25 years experience developing enterprise technologies. And if you think about where he spent that time, he spent 12 years at Amazon Web Services, where he scaled the AWS Boston from startup to thousands of employees. And prior to that, he also spent 20 years at EMC Corporation, which was actually acquired by Dell, during which time he held multiple executive and senior leadership positions in the company. So this is a great addition to the exec team. And he'll bring a lot of knowledge and experience to the board there, just as they're about to start going forward their strategy with the Panther Creek site and many other sites they've already got there that were taken on when they purchased Stronghold Mining earlier in the year. So a lot of things expected from Bitfarms. All the sort of jigsaw pieces look like they're starting to fall in place. If you look about the last sort of 3 months, their share price has increased. I think it was at a low, maybe around the 75 cents mark. And when I looked at before market opening today, it was over $1.40. So they've managed to sort of start recovering, get out of that sub $1 range where the SEC start giving you notice periods on how to get your share price above the dollar, so you don't fall foul of their rules and regulations concerning additions to the Nasdaq exchange.
Yeah, I'm glad to see they got out of that situation. And you got to remember here, they've had significant selling pressure as Riot is unwinding that investment in Bitfarms. So great to see Ben and team adding more bench strength to the team in terms of the board of directors, and definitely one to keep a close eye on. As you say, a lot of the pieces starting to come together here for that Panther Creek site. You can see some of the great renderings here we saw in the most recent investor deck. So if you haven't watched that interview with Ben Gagnon, definitely worth a watch. Now, related to that story, as I just mentioned, selling pressure from Riot. It appears based on these SEC filings you gathered, they're continuing to exit that position.
Yeah, so we only mentioned right last week, they'd sold another chunk of shares. They were down to 7.2% of the company. Remember, at the height, they had 19.9% of Bitfarms. So last week when they made the last announcement, 7.2%, had just under $40 million. Well, there's been another announcement today. They're now down to 25.6 million shares, which represents 4.6%. So they sold the best part of just over 14 million shares. And it looks like now, we'll probably see the remaining shares being sold in the next week or so, and that will end that particular saga, which, to be honest with you, hasn't been great for either company. We did talk about this extensively on the podcast when news first came about, and you've got to remember, any company going in and trying to buy another mining company, Bitfarms were potentially a great asset to have, but they wanted to go their own direction. The negotiations have been going on for a while before it even became public. I think there's been discussions for like well over a year before the first announcement came out that right, we're going to start a serious bid for the company and start buying more and more shares. But that seems to have fell away when that seems to have fell away when Bitfarms then started to apply some of the things that Riot has said they've been not performing in terms of like the independence and other things, and they started to really tighten their controls over the company by following some of the guidance that Riot had put their way in terms of announcing a number of independent directors. And we talked about, another one today. That's 6 out of the 7 are all independent, which is really strong for the company, bringing in lots of expertise from other areas that they've belonged to. But this is again, it's just a sort of like a documentation now, just letting us know that really Riot are going to move away from Bitfarms altogether. And I expect to see maybe 1 or 2 more updates to finalise this position. And let Bitfarms then get on with what it needs to do and grow its HPC. And also at the same time, Riot can then fully focus on what it wants to deliver at Corsicana with the 600 megawatts available there.
Yeah, it's a good point. Hindsight is 2020, they say, and looking back, a lot of time, resources, energy from both companies really spent on this project that didn't really come to fruition. So glad to see that one's in the rearview mirror. I think both CEOs and teams will be happy about that. Another nice update today. This one hits close to home for me. Buzz HPC, we had Craig Tavares on the program a few weeks back, did an HPC special. This is, of course, the subsidiary of Hive Digital Technologies, their HPC-focused area or vertical. We also had, the chairman and CEO, IREN, and Frank Holmes on the program just yesterday. So we talked extensively about this HPC strategy. They emphasized a number of times this sovereign focus or sovereign desire of nations to have data centers within their borders, within their own control. Today, they came out with a big announcement with Bell Canada. Prior to starting YouTube, I was in the telecom industry in Canada. Bell was one of our immediate competitors. So I'm familiar with these companies. They obviously have a lot of data, a lot of customer information. And I think this is just the start of some of these sovereign data center agreements we're going to start to see.
Yeah, so this update is really, Buzz HPC, which, as we know, is a subsidiary of Hive Digital. And it's partnered with Bell Canada now to build one of the nation's largest sovereign AI ecosystems. And again, if you haven't watched the podcast with Frank and Aidan, they talk a little bit about, the way forward, and they talk about sovereign, taking a stance in AI, and also about defense. So take time to watch the podcast. You'll get a lot more information there. Now, what we know about the actual data center is going to be powered by NVIDIA GPUs and also using Bell's AI fabric. And this initiative ensures really secure Canadian hosted infrastructure for government, enterprise, and for research. Now, they're going to launch it initially with a 5 megawatt Manitoba deployment, which will advance the innovation, competitiveness, and sustainable AI growth. So looks like, this is just a starting point, and this has got maybe plenty to grow as we get through this early phase of it. I'm sure we'll get more and more updates along the lines of this. They were very, very bullish on the podcast yesterday, and literally 12 hours after the podcast, they're making a great announcement like this.
Yeah, they certainly are. And one thing I learned in that podcast is just how big the AI scene is here, specifically in Toronto and at the U of T or University of Toronto. A lot of expertise in the artificial intelligence HPC sector. So as a Canadian, great to see that. The next story here related to CleanSpark. This is a funny one, Anthony. We had to bring this up. They obviously just swapped out their CEO. Zach is no longer at the helm. They've elected to bring on the executive chairman, Matt Schultz, as the new CEO. They had lined up an interview with Will Foxley, Blockspace Media. They're an exclusive sponsor of that media platform, to talk about the new CEO position with Matt Schultz. However, he was unable to make it. They swapped out for Harry Sudek. So an interesting move by the CEO, especially when they're trying to regain that retail engagement. Now, the interview itself, there's an interesting section in here. You can see highlighting CleanSpark's possible interest in HPC AI. So this got me thinking, and I want your opinion. Potentially, it was Zach who was resistant to the HPC AI. Now they've made a change, and we may see a strategic shift in CleanSpark, the only remaining pure play Bitcoin miner.
Yeah, I mean, it's interesting. They've got Harry Suddock, who's the head of investor relations at the moment at CleanSpark, to come on and replace the CEO. And the thing is, you'd expect, with all the turbulence we've seen in the last few weeks and the share price continues to fall further against its peers. I mean, if you now look at market capitalizations, I think CleanSpark is currently seventh in terms of size, behind the likes of TeraWulf and Bitdeer. IREN yesterday was pretty much nearly twice the market capitalization of CleanSpark. Now, you mentioned the question there about HPC. In fact, you and I were both in Amsterdam last year and sat and listened to a great interview with Amanda Fabiano, who's one of the directors at TeraWulf, and Zach as the CEO. And he was, effectively adamant that they weren't going to, go into this HPC. They didn't see the same as the rest of the miners there. They thought it was a bit more of a bubble. And actually, not the only ones to do that as well. I mean, we also saw the likes, I think, of Michael Saylor saying similar things initially. But, things have changed since then. And we've seen, a great deal of interest from the Wall Street analysts. When you're looking at HPC, looking at predictability, you can see contracts, you can see the finance of the contracts, no relationship to Bitcoin whatsoever. So there's no volatility there. You're delivering a service and you'll get paid for a service. And, you'll get paid handsomely in some cases. I mean, we've already seen, a number of mining companies literally lay out their revenue streams all over social media. They're not even hiding the fact how much they're getting paid. They're actually, to a certain extent, they're actually bragging about it. In when you look at the size of some of these contracts, and we already saw the first contract from TeraWulf, and lo and behold, now they're having a real sizable contract with Fluidstack as well. And these numbers will appear shortly. They're always receiving revenues. Core Scientific did exactly the same thing with their a deal with CoreWeave. They highlighted that that's effectively $850 million coming in every year with an operating margin after all costs of around about close to 80%. And other miners like Applied Digital and Galaxy have also highlighted what they're receiving as well. So this is about real predictability. Now, do CleanSpark, one of the things we've discussed before, it's about the number of sites they've got. They've got 32, 33 sites. Sandersville is probably one of the only sites that may be, of the right size to even do a smaller HPC deal. I mean, some of these sites are only 10 megawatts, 12 megawatt sites, but Sandersville, I believe, is over a couple of hundred megawatt sites. Then it's a case of what do they do about Bitcoin mining, because a lot of these sites are at capacity for Bitcoin mining. Are they going to, move away from this pure play, which they've been really adamant about doing for a number of years? So it really, makes me wonder what's their strategy going forward. And I would have expected them to have, Matt on the podcast and basically delivering about, what we're going to do next, not just sort of like, having a throwaway remark. We might look at HPC. I mean, Zach was speaking as CEO on behalf of the company, a year ago, not even a year ago, 9 months ago in Amsterdam, saying not going to be doing any HPC. And you can see what's happened to the share price ever since then. And like I say, it needs to get a reboot, and that's what was expected. But and interesting the fact that they had the head of IR instead of the new CEO. So let's see what happens next in this space.
Yeah, I'm looking forward to seeing what Matt's plan is moving forward. My main question now is it too little too late? They're the last player out of the gate, obviously not first mover advantage in the HPC AI realm. So there's a time component, but also, as you alluded to, the actual site makeup of their portfolio a little bit different than some of the larger single site operators we see on the channel as well. So that one, stay tuned. Bitdeer, they came out with their earnings Q2. We have Jeff LaBerge on this afternoon, so we won't go in too deep on the earnings itself, but a few slides here we did want to talk about. Maybe we'll kick off with some of the financial operational highlights.
Yeah, so revenues were up 57% year over year, and 122% sequentially. So, but actually, a lot of that revenue, remember, we've talked about the seal miner. Well, they had $69.5 million of revenue from external sales of the seal miner A2. And even though some of the sales were cancelled because I think a lot of customers are waiting for the seal miner A3, when you look at the efficiency of that machine there, and the fact that the seal miner A2 has been well received, there's an expectation that a lot of customers thought, let's wait for the next miner. Bitdeer went and started using those machines that they produced, started filling up their own sites with them. So as I said before, it was pretty much a win-win for them. Now they're expected to get to 40 exahash of self-mining by the end of October, and we're in effectively August now. So not too many months away to deliver that. Best part of 10 weeks to get to 40 exahash. So that's going to be a significant rise this year in terms of hash rate. They made a gross margin of around about 12.8 million on the 155. So around about 10% gross margin. Not as good as some of the peer miners. We'll need to understand what some of the costs were within their operating costs, because they made a net loss of about $147 million. Now, yes, there was some depreciation in that, but there were some other operating losses. So maybe Jeff can sort of highlight those on the podcast later as to, was it to do with the costs of delivering these A1, A2 seal miners? Because when you're, looking at the research and development to get these to market, there's some significant costs there. So maybe there was more development costs. And what we'll see from now on, now that development costs have been utilised, it's now production costs. And remember, when we had Harris on the podcast earlier in the year, and we discussed about, are they able to, produce these with a good margin? He was very clear that they could produce the seal miner with an exceedingly good margin. And, if they were able to sell them, they would have, great revenues, great margins. And if they couldn't sell the machines, they'd be great acquisitions to put into their sites. Bear in mind, you've got a company here now with way over, 1.2 gigawatts of power in use at the moment, with a further 1.4, 1.5 gigawatts of pipeline to be utilized over the next sort of 18 months.
Yeah, the other slide we wanted to just quickly mention their exahash growth targets. You talk about plugging those machines in at their own facility. You can see they're quoting 40 exahash per second by year end here. So aggressive growth, similar to what we're seeing out of Hive.
Yeah, absolutely. I mean, they say by the end of October, so that's that's before the end of the year. So, they have been adding significant chunks month by month, but it's going to take 3 months now of some real significant increases to get from where they are at the moment, which is around about the 20 exahash all the way up to 40. So they've literally got to double it in the space of 10 weeks. And that'd be something like what we've seen the likes of IREN and maybe CleanSpark close to achieving their growth. But Bitdeer, they're producing the machines themselves, so they'll know from production. They've already got the sites up and energized. It's a case of then logistically getting those machines. And remember, one thing about Bitdeer that separates it from the majority of other miners is their locations are all over the world. So they don't have as much issue with regards to things like tariffs in the US. They can put their machines in Bhutan, in Norway, in other areas around the world before they have to start thinking about what the implications are of moving machines to the US. And so again, we'll get more and more in-depth responses from Jeff today. But Overall, it's great to see the amount of that 70 million is really good revenues there. Let's see what the costs associated with that 70 million. If Jeff can sort of break that down for us, give us an idea of what the margins are now or what they're likely to be in the next few quarters.
Yeah, I'm curious to ask him about the market share percentages as well as they try and take 30% of the total addressable ASIC market. So some good questions on the list. The final piece we wanted to leave you with, Luxor hash rate index. Nothing really too exciting going on here. $55 hash price. We do have a difficulty adjustment this week, plus minus 1%. So nothing too impactful to the miners. However, I did want to get your thoughts here, Anthony, as we're coming out of Q2 earnings. We're already about halfway through Q3. How is the hash price going to be impacting the margins here?
Yeah, I mean, obviously nobody wants to see the hash price, drop, back to where it was there. We've had a nice run in the last few months where, hash prices got into the $60 range. Today, down in the $55 range there as the Bitcoin price has fallen. Network hash rate, it seems to be on the rise in the month there. I don't think we've seen it as high as 970 for a 7-day moving average. So we know it goes way above 1,000 exahash, and it goes low as well. But to have that 7-day moving average of 970, that's very, very close now to having a 7-day moving average of literally 1,000 exahash. Difficulty adjustment will take place in a few days' time due to go down by a fraction of a percent, 0.54%. That's because it's taken just slightly more than 10 minutes to achieve the block. Block's supposed to take 10 minutes. At the moment, 10 minutes and 3 seconds. So it's going to be a negligible change at the moment with only a couple of days left. The previous adjustment was an increase of 1.42, and transaction fees remain quite low. So Bitcoin miners are still looking to try and get as much hash price as possible because it's they've got less than 3 years now before the next halving. And when you listen to some of the miners, listen to what Ben said and other mining CEOs, it's going to be a challenge post the next halving for these miners unless they can attract some significantly lower energy costs than they're achieving at the moment.
Yeah, you're certainly right about that. It's so crazy talking about the next 2028 halving. I remember going through the prior halving, thinking the 4 years is so far away, and now it's just creeping up on us slowly but surely. So with that being said, let us know your thoughts on today's content and news. Make sure you check out some of these interviews. Again, we've had a whole suite of executives on the channel covering earnings over the last couple of weeks. Hit the like button. Feel free to subscribe. We'll see you back here shortly.